Hello and welcome to On the Couch with Steve, a podcast where we help you navigate the often complex world of buying, selling and renting real estate here in Ipswich in Queensland. I'm Steve Athanates. I'm the owner of NG Real Estate Ipswich. I'm joined today by the big boss. We've got Logan Stanford from Stanford Financial. We normally have Steve Beach, our great friend from the show. He's been with us for countless episodes. I think this is your second time.
Yeah, might be. Steve's the regular. So
Steve is the regular, but we brought in the big guns for the last episode of 2024 because today we're talking about something that everyone is always interested in, and that's interest rates. Now, mate, you weren't here for our predictions. I made one. Steve made one. I'm sure you had a prediction what was the Reserve Bank was going to do. Now, the announcement has just come out. We're filming today, the day the announcement's just been made. It's the 10th of December, 2024. Drum roll. What did the Reserve Bank do?
Rates kept on hold again.
Whoa, who would have guessed that?
No big surprise there. No big surprise. So kept on hold, and then the next meeting's in February. But
end of February, you said?
So we'll see. Yeah. Just finished listening to Michelle Bullock's speech, where she sort of gave a bit of an explanation as to what's been happening. But mate, it was pretty much the same old story as we've been hearing.
Well, I was just looking at the article and they're saying, more uncertainty, more of the same. Obviously, just for the pundits at home, I predicted interest rates would remain on hold. Steve Beach predicted they would remain on hold, and I'm sure you thought they would as well.
Yeah.
So again, the Reserve Bank has not surprised anyone, and interest rates are on hold. Now, mate, the devil is always in the detail. Was there anything that came out of what she said that gives us a clue about what's going to happen in February?
It's interesting. So there's some big economists out there predicting what's going to happen. They were talking about it's Valentine's Day in February, and then it's Mother's Day in is that right? Valentine's Day in February? Is that April?
Yeah, 14th of February.
Mother's Day after that.
You better remember that.
Yeah.
You just got to gauge.
Yeah, I did. And so they're like, are we going to have and you could tell them, the journalist there looking for the headline, and she was just adamant she wasn't giving any indication. But really what they're looking for is a fall in underlying inflation. So I'm not sure whether Steve covers on this often, but the headline inflation number is great. It's sitting at 2.8%. That's where they want to see it. But underlying or trimmed mean inflation is still at 3.5%, which means, I'm not sure whether Steve explained to you, but essentially the difference between those two is all of your energy rebates and all your government stimulus. So the government is making inflation look great, but the governor's saying that's not going to make me drop interest rates because I know that's artificial, that's short term. So that's really what she's saying, is she wants the real inflation to drop before she makes a move, and she's not going to be directed any other way by politicians or an election in March to May next year, no later than May. Some people are saying there'll be an early one in March. A governor a Reserve Bank won't really want to mess with an election too much, and so things are probably going to be pretty stable. Look, 3 out of 4 of the big banks are saying that it's going to be May. CBA, Commonwealth Bank, largest bank in the country, is saying February. They think February.
Let's vote for February. I'm going for February.
Great. It'd be great, wouldn't it? Especially given what's happening with property, as you would know here in Southeast Queensland. It's massive already.
Well, we'll talk about that because when you said, has Steve educated us? Steve has educated myself and obviously all the people at home about this underlying inflation. And I guess the concerning thing is even I think as recently as this week, Jim Chalmers is still talking about offering further incentives, which is obviously still going to screw with the underlying inflation because the government continues to offer even further subsidies for people who are struggling with cost of living pressures.
Yeah. We've got a mid-year budget update in a week. So we'll really, which is just going to show the economy in the red, really. We're in a per capita recession, and the only thing that's keeping us out of a recession is migration. Because our migration numbers have been so high. The economy is really struggling. And that's what these economists were asking the governor is, on one hand, you have inflation, which is just stubbornly too high. And on the other hand, you have the economy, which is really in dire straits. And she's trying to balance the two of them. So, you know, obviously coming up to an election, the Treasurer is going to want to be shoveling out money, but that's just going to keep interest rates higher for longer. And I think he'll cop a lot of flack for it because if you remember, you know, towards the back end of last year, we were all saying, oh, mid next year we'll get a rate cut. And then the budget came along and everyone got their handouts and their cost of living rebates and 50-cent fares and the rest of it. And then all of a sudden we're now talking about mid next year for a rate cut because the government can't help themselves sometimes, but shovel out the money when there's an election on the way.
We'll see what happened. Obviously, we know there's been a change of government for Queensland. They obviously tried to shovel out plenty of money. Didn't help them. No. We'll see what the current federal government does. We won't discuss politics in this podcast, but we all have our own opinions. But all I would suggest is, I think it is a concern because I think you're right. I don't think the current government will be able to help themselves. They'll keep trying to spend money in order to try to gain a vote. But I guess what we're saying is the problem is it just defers the problem further down the line.
Yep.
And the people who really need interest rate cuts are getting put off because, it's great that you get a 50-cent fare, but if you don't use public transport, who gives a crap?
100%. Yeah, and I think Australians are really woken up to this. I don't know, before this whole COVID era and interest rate saga, who knew what inflation was doing? Before that, it just wasn't even a topic of conversation. But Australians have really woken up to it, and so I think that's why, who knows, before in this budget next year and before the election, I think they'll be less inclined to do any reckless spending to buy an election. I think they'll have to be responsible because Australians know and they're sick of waiting for an interest rate, and I just think they would just get really, really hit hard for it. So, because the average Australian knows what inflation is now, which in our line of work, when we get people on the phone to us talking about their home loans, and they know what's going on with inflation, that's a very different story to this pre-COVID era before interest rates were up, down, and sideways.
It is an interesting point that people are much more aware. So I guess that's a good thing. Obviously, the world's changing. We're 21 days or 3 weeks away from the end of 2025. We've got a new American president coming in.
Well, yeah, she spoke about that today briefly.
Interesting. What did she say?
Well, she said, she was asked a question about it because everyone loves to talk about Trump, right? Grabs all the headlines. So they said, is this going to impact our economy at all? And she said, look, we've done some modelling or some light modelling on that. Because Trump's obviously spoken about tariffs in America and putting tariffs on everyone who doesn't have a good trade deal with the US. We're only really going to feel that, what the governor has said today, we're only really going to feel that is if China's economy starts to feel the brunt of that because they're a big buyer of a lot of our exports. So if the Chinese economy, which has been really struggling lately, they've been dropping their interest rates. They're a massive buyer of our iron ore, which is one of our largest markets. So it has a massive impact on the Australian economy, what happens in the Chinese economy. So although the US doesn't have that direct impact on the Australian economy, through China they do. So it'll be interesting to see what that.
Well, it's funny you even talk about China because I read an article today and obviously big American car makers, they went into China in a big way and they're losing billions.
Oh, wow.
They reckon that that Chinese market with their affinity to buy American cars has just died.
Wow.
So there's a problem in that market where some of these big US car makers are losing literally billions. I saw a figure of something like $8 billion they lost in the Chinese market this year. So interesting dynamics about what's going to happen. Now, obviously, for anyone out there who is struggling, we haven't got another interest rate cut again. Is there anything that we don't know about, or is there something new that you could talk to people about with any sense of relief?
Yeah, of course. So no Christmas present interest rate cut. However, the government did the guillotine to pass a lot of laws before they shut for the Chrissy period. And one of those pieces of legislation that they passed was the new Help to Buy scheme. So what that means is, and Steve may have alluded to this when they were talking about it. It's been a long time coming, but instead of the current first home loan deposit scheme, where with 2 to 5%, the government will act as a guarantor like mum or dad, and you avoid lender's mortgage insurance. This is a new scheme where the government will actually own part of your home with you. So between 30 and 40%. 40% on new homes, 30% on existing properties. Now, the big one with this is you don't have to be a first home buyer. So as long as you don't own a property in Australia, at the time of application, so it can be your second, third, fourth, or fifth subsequent property, then you could be eligible. And what that means, a big difference between that is when you go through these guarantor schemes, you still have to pay 98% of the loan back, or however much you didn't contribute. You're still borrowing all that money. Now the government is saying, well, we'll put in 40% of the cash, so your repayments are much smaller. So the actual servicing will be a lot easier because you only have to pay back 60% of the value of your loan because the government's putting in the other 40. So the repayments are much lower. It's much more affordable. However, what that means is that when you go to sell, the government's going to take their clip. Now we see in our conveyancing division and whatever, a lot of people that go joint tenants, and you might see two mates that are buying a house together, and when they sell, they split the proceeds. Essentially, that's what you're going to be doing with the government. Is you might be going 50-50 or 40% share in a property, and when you go to sell, the government's going to want that on the growth you've seen. So this massive growth that we're expecting in Southeast Queensland, even into next year, they're saying 6 to 9%. If no rate cuts, 9 to 11%. I'm sure you're tracking this. If there are rate cuts, still, which is amazing. That growth you're potentially going to hand over half. They haven't now. Each state. Going into a little bit of detail here, each state will have its own way of administering this. And so the Queensland government has to decide how they want to administer it. And they haven't told us yet how you're going to have to pay the government back. That's still to be released. You may have to pay back 5% every year or every 2 years, or they haven't released the details. So it's going to be very, very interesting to see what that is. But that's something that the Labor government's very proud of. They got through to help people with buying property.
Look, I've actually got experience with this. This isn't the first time the government has done something like this. I just sold a house literally 2 months ago in Spring Street at East Ipswich. Now, the lady, she was effectively a single mother. She bought the property. She bought it with the assistance of the Queensland government.
Yep.
Not sure what the scheme was called, but it's actually on the title that the government is effectively a part owner of this property. Now, what happened in that situation, and I'm not saying this is what's going to happen into the future, but effectively when you go to sell that property, you need to advise the government of your intention to sell. In this case, on the property in East Ipswich, she actually needed permission from the government to sell the property, and she obviously had to send paperwork of the fact that she'd chosen me as her agent, what my fees were, etc., and we had to wait for approval before we could effectively list the house for sale. But the government, over the course of the time, she'd owned it for the best part of 30 years, and she always had the option to pay it down and have a bigger chunk of ownership, but she had decided not to do so.
Yeah.
So the government still owned a big chunk of that property. So, look, I think it's a positive thing overall for the lady at East Ipswich, Linda, her name is. She's a lovely, mature lady. It worked out beautifully for her in the end. She sold the property for far more than she ever thought it was worth, but she did have to give money back to the government because the government owned a percentage share of the property.
But she got her foot in the door, though. She was able to build wealth through property, which is one
Correct.
of the greatest pieces to do.
Look, I think it's an exciting concept. Again, the devil will be in the detail as to how the government's going to administer it. But for anyone who is obviously struggling to get in, I think the key thing that you've talked about is the fact that effectively you'll only have to make the repayment on 60% of the loan amount as opposed to 98.
Well, 98, 100, but depending on how much you were to put in under the other scheme, which will still be out there for first home buyers and single parents. There's those schemes that are still there. It's just another one for people that need it, which is great.
You heard it here first. On the Couch with Steve. What's the program called?
That one. That one? You've completely thrown me there. The home to help to buy scheme.
Help to buy scheme. Yeah. It's coming to Queensland. It's coming to a town near you.
I thought you were about to say On the Couch with Steve is the program.
No, it is the program, Logan. It definitely is the program. But no, what we're going to talk about now is it's prediction time. Okay, RBA is going to meet somewhere towards the end of February 2025. Okay, let's get used to saying that. 2025. What are they going to do?
Oh, they'll be on hold 100% in February. In my opinion, they'll be on hold.
It's your opinion. I bank with a Commonwealth Bank. Hello to anyone out there who has helped me with my loans. But I'm with the Commonwealth Bank. I like the fact that they're the only ones saying that it could happen in February. Look, for everyone at home, I really, really hope that they do it. When's the next meeting after February?
Be March.
Right. Sadly, I'm going to go with, I think they're on hold for February too, but I'm really hoping we'll get a cut in March.
Yeah, look, I think that a hold in February, it's going to be the largest period we've ever seen without an RBA meeting between this meeting and the next. We've never had it for one of these new guidelines, so there's going to be a lot of data for them to look into. So we'll see.
And that's what I'm hoping. I'm hoping, like, even if we don't get it in February, it would be awesome. I'd love to be wrong. I'm sure you'd love to be wrong. But I think there'll be enough information there for them to analyse. And I think that's the old chestnut that Michelle Bullock has used a lot, is there's not enough data for us yet to determine, is this real or is it underlying or wherever it is. But I think this may be the one time where she can't really rely on not enough data.
Yeah, 100%.
So fingers crossed, but we'll see what happens. So from myself and from Logan from Stanford Financial, an expert in the trade, if you need a home loan, talk to Logan and the team. But all I'd suggest, we're both thinking for February 2025, tongue twister, that interest rates will remain on hold. So we'll have to stay tuned to see what happens there. Now, mate, obviously, thank you so much for stepping in for Steve. Absolute pleasure to have the big boss in town today for the final episode of 2024. For everyone at home, if you've enjoyed the content, if you've got any questions you'd like to ask, please subscribe to the link below. Once again, thank you to Logan Stanford from Stanford Financial. I'm Steve Athanates. I'm the owner of Engine Real Estate Ipswich. If you look forward to seeing you in 2025 on the couch with Steve. We'll see you soon.